So Olivier Blanchard, with your new World Economic Outlook, how do things look at the beginning of 2014?
I think things look better. Looking around the world, the recovery is strengthening. Actually, more or less as we expected, and very consistent with the forecast that we had last October. I think the simple numbers are that we forecast world growth in 2014 to be 3.6%. That's an increase of 0.1% relative to our October forecast, and 3.8% in 2015.
And what's behind those numbers?
So if you look at advanced economies as a whole, you still have accommodative monetary policy, which is helping, which has helped, continues to help. And then the brakes to growth, fiscal consolidation, which was very strong, is becoming weaker. Banks which were in bad shape are slowly getting in better shape. So all this is combining to increase demand and increase growth. There are differences across countries, obviously. So in the US, all the stars seem to be aligned. So we're predicting fairly strong growth in 2014, 2.8%. In Europe, in the Eurozone, even there, things are better. We're predicting positive growth in all the Eurozone members. That's the first.
Bond yields in some of the crisis-hit countries in Europe have returned to pre-crisis levels. Does this mean they're out of danger?
Well, they haven't returned to pre-crisis levels, but they have decreased. Are they out of danger? No, I think they are still in the danger zone. If you look at what's happening there are some good developments and some slightly worrisome developments. On the export front, exports are doing well in some of these crisis countries. That's very good news. But internal demand is very weak. And that's due to interest rates, which are still very high. I mean, if you want to borrow in countries like Spain or Portugal, you have to borrow at very high rates. So this leads to low activity, which leads to weaker banks. They have a hard time getting out of that bad loop.
A new risk that you've identified for advanced economies is a risk of low inflation. What's behind that?
So at this stage, our baseline doesn't have deflation, but it's a risk. There is no question. And the reason is very simple, is that there is an output gap which is putting pressure on prices. The rate of inflation is coming down. The question is how low will it go? Now, if we get to deflation, then deflation is potential trouble, because deflation means that real interest rates are higher, that the real value of debt is higher, and this feeds on demand, which itself slows down the economy. And again, bad feedback loops come in play. So that's a risk. That's something we have to avoid.
Considering the calm market response to the Fed's tapering announcement, does that mean that emerging economies aren't going to have to worry about sharp reversals in capital inflows?
I think you're right that the very mild, non-existent reaction to the start of tapering, of the announcement of the start of tapering, means that markets have largely priced in what was going to happen. That's good news. It was very different early in the summer when there was a very strong reaction. So I think that's priced in. That doesn't mean that it's going to be all smooth. Capital is going to get out of some of the countries. And the countries which have weak macro policies or weaknesses, if you want, are likely to have a tougher time. We saw this last year. We're likely to see it again.
Olivier Blanchard, thank you.
Thank you.